That venture capital bucket is the compounding machine for the family. We don't look to that bucket for liquidity. When you look at the long-term steady state return for, let's call it the 3 asset classes that I have experience with at Verdis. So worked on the public market side in the very beginning. That long-term steady state CAGR, so your compound annualized growth rate, is an 11%. Also worked on buyouts. That long-term steady state compound annual growth rate is a 14. And in early stage venture, that long-term CAGR is at 25%. So if you think about that in terms of a fund life, let's call it realistically 12 years for early stage venture. I mean, we could maybe go out to 15, 20. It's a pretty long-term marriage. But, when you think about the compounding benefits associated with early stage venture, if we go out to 12 years, if you're compounding at 25% for 12 years, that turns into a 14.9x. If you're compounding at 14% for 12 years, that's a 5. And public markets, which is 11%, gets you a 3.5x. So we don't look to early stage venture for early DPI.